Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about the psychology of a winning trader. Why most day traders lose money. Why do day traders lose? Number one, they don't view trading as a profession. They read a few books, their friend's making a killing in the market trading crypto or Bitcoin or the internet bubble. They've made a ton of money on paper and they want to get into it. It's in the news, it's everywhere. They're taxi cab drivers making money. Kids are trading from their phones on Robinhood, and they're making millions on shorting GameStop, and they want to get into the market. So they buy a couple books, they read some stuff online, and they get their computer all set up, they get an account set up, and they start trading. Only to find out that it doesn't quite go as planned for most people. Now, I had a discussion. Somebody said 90% of traders lose money. And somebody got really offended by that and said, that's not true. It's 82%. I get tired of people throwing that number out there. And, here's the bottom line. Who cares? Who cares? Seriously? Most traders lose money. Why is that? And I can tell you with great certainty and confidence a number of reasons. But we'll cover the big picture. We'll talk about some specifics. And I just want to hammer home to each and every one of you the importance of every single day developing more and more certainty in what it is that you're doing trading. The more certainty that you develop, the more detail, the more finer detail that you hone in on in every aspect of the 3 M's, method, mindset, money management, as Brent Penfold says, the more and more your results will reflect that. Number one, they don't view trading as a profession. Now, people always hear this analogy. Would you go and get a book on heart surgery? Would you want your friend to read a book on heart surgery and then to perform, open heart surgery on you? No, of course not. Most professionals will spend 3-4 years in an undergraduate program and then specialize in their area of expertise, whether that be medicine, law, engineering, it can be in any field, computers, and then they may further specialize within their field to become very, very specialized. And of course, that is partly why their paychecks reflect that. We have cardiac surgeons, we have neurosurgeons, we have orthopedic surgeons, and within those specialties, we have even specialized areas within those who are the cream of the crop. So when we talk about trading, number one, the first thing is business plan. They don't see it as a business. They don't have a business plan. They just click the computer on, I'm going to make money. And some people can do that. They can, they've had some experience or they've got an area and a background, but I'm talking about the average retail trader. How does your trading business run specifically? What hours do you work? What kind of computer do you need? What happens if the power goes out? Do you have a phone available? Do you trade from your phone? How does your trading business operate? What is actually the specifics of what your trading business is? What is it? Is it just you going to the screen every day and trading, or do you have a specific model that is going to generate your business revenue? A specific business model, not saying I'm going to buy the low and sell the high. That's my business plan. Or I'm going to sell the high and buy the low. What specifically is your trading business? So the finer detail that you hone in on that, on every single aspect, the type of trading that you are going to be doing. Is it going to be end of day trading? Is it going to be day trading all day long? Is it going to be trading 1 hour a day? You can decide that, but you need to be very specific. And does your business grow from the type of trading that you're doing in your trading business? Coming to the next part, trading plan. What is the method and how will you make money from the markets, which we just kind of touched on, but what is your specific edge? If I said to you, What is your specific edge? What is the main thrust of your trading business? Is it just that you get on there and if there's something high, you sell it, or something broke yesterday's low, so you buy it? What will be your business plan day in and day out that will have edge for you in the market? What are your different models? Jim Simons from Renaissance Capital, he had algorithmic trading that took years, and quant trading that took years to develop, and they run multi models, and they're constantly building code. They don't hide that from each other. They build those codes together, but they have multiple systems running, but they have their edge is a mathematically defined edge that their system can display through profits and losses. You can do the same as a discretionary trader, but the question again is what is your edge? Is it a specific setup, or do you use some indicators and when they cross you buy and sell, or do you go to the screen and if something's broken a level you buy it or you sell it? What specifically is your business plan? So if you have a Subway shop, you get a model with that. If you get a McDonald's restaurant, you've got a business plan that every single McDonald's runs by. Now your trading plan doesn't have to be the same as the guy beside you or the lady beside you. But if they were to copy and paste your business, could somebody else run that business? Or is it just your knowledge of that you felt it was oversold, so you bought it, or it was up high, so you sold it? What is your business? What is your trading business edge? What specifically are your executable edges in the market? And then number 3, what is your self-management plan? How do you manage yourself from preventing self-sabotage? So I know firsthand that you can have expertise, you can have a general business model about your hours, your hardware, about how everything's going to work in terms of the mechanical support for your model and how you're going to run your business. But how are you going to prevent yourself from erratic, impulsive, irrational behavior, over trading, over leveraging, holding on to losers, taking multiple trades, impulsive trades, trading outside of your business hours? What happens if you drive by a McDonald's and I guess they're open all night now, but if they weren't open all night and you drove by there and you saw some guy sitting in there by himself with the lights on, flipping burgers, what would you think? Maybe he's hungry. But how will you manage yourself? How are you going to continue to thrive and prosper? How are you going to prevent burnout? How are you going to, when I got into trading, it was about freedom and lifestyle. But if you're spending 8 hours at a screen every day, why not stick at your day job or your night job, whatever that is? What is your self-management plan to maintain your energy, to maintain your focus, to maintain your edge, to make sure that you're not going to do anything sabotaging to your business model? That's your business is profitable, and then you do one bad sabotaging mistake and it blows your business up, which again comes back to, I love when people say, let's see your back test results, let's see you do this and do that. But see, they don't understand. They don't have a plan. They actually don't have a business plan, a trading plan, or a self-management plan, because they're just going to the screen every day looking for what they perceive as a buy or what they perceive as a sell. So those 3 things alone combined are why most day traders will lose consistently over time. Number 2, they don't have an edge that's scalable. So coming back to edge, scalable edge. So the first thing traders think of when you say scalable edge is they say, well, as I get bigger, I'm going to trade bigger. But they don't understand that not all trade setups or all trades taken are the same in terms of their probabilities. Now, I know a lot of traders out there will just right away say, nope, most trades are 50-50. It's 50-50 on any trade. That is not true. The idea is to get rid of all the 50-50 garbage out of your playbook and focus on the 90-10 setups. 90-10. So that means 90% of the time you got a high probability success rate on those trade setups, because the setup is so skewed, and there are lots of them, so skewed heavily that will at least get out with a small profit, or maybe even at break even at a worst case scenario, is that if you cull out the garbage and then you have your 90-10, then you can filter the 90-10 out to which ones can I scale into with size because they have maybe a 10-to-1 return on that risk, or 5-to-1, a high probability 5-to-1 trade setup instead of a 50-50 2-to-1 trade setup. The finer detail you focus on with your edge and then understand the 90-10 versus the 50-50, your trading will go to a whole nother level. Your stress will drop. Your whole approach to the markets will change. It eliminates analysis paralysis. So many traders send me, screenshots of charts that have these indicators and everything else on there that are for their confirmation bias and confluence and, these other things. And again, it comes back to simplicity. One of the things that I talk about with Peter Brandt, classical charting, like Peter is a master craftsman. And I have learned so much from just his approach, just by studying him and listening to him and watching him. His charts are so clean. They're clean. They're lines. His geometrical structures are very clearly defined. They're simple. His approach is, charts only give you your tactical approach to viewing the markets. There is no specific edge themselves in the charts. But if that's the approach that you use as part of your business plan and your business model, there has to be a method for identifying trades, a method for entry, a method of establishing an initial protective stop level, a method for taking profits and or moving protective stops, overall money management rules, and patience and discipline. When you have a very simple model, that removes the analysis paralysis. So a lot of traders have, focused on different things, and you'll notice that my charts for the most part are price only for me, because again, I've done this for a long time, and I got rid of everything because I know now that with time and price, there are two things that happen during the day. We have highs and lows, we have buying levels, selling levels, but we also have time levels, time stops, based on how the markets work around the session timings. And so when you know what you're looking for, having other indicators on there doesn't necessarily, they're lagging in 90% of the cases. They're lagging indicators. And so the cleaner that is, if you have a thesis and you go to the market with a plan, not to say there's anything wrong with that, but for me, learning from Peter, I'm just looking for a simple, clean pattern. And when it develops, I'll narrow that down and have a couple of time frames on there, and I'm looking for my entry on the smaller time frame, only so I can get the best fill possible. And if it starts to confirm, I'll add to that. But I'm using the larger time frame as my bigger structure to view the trade setup. That removes the analysis paralysis. I'm just looking for simple stuff. So the next thing is live performance. And so this is why, and traders know this over time, the longer you've been trading, people can go around and put names on everything and have all these little things about charts and everything else. But at the end of the day, if you have a setup that you're looking for, you need to just be able to go in and execute, put a stop in, put your target in, and let the trade do what it's going to do. Being, having FOMO, you've been burned a lot of times. So this time you get into you do everything right, and you're in a winning trade that's a really potentially maybe a 5-to-1 risk reward setup, and you get out with 1-to-1 because you're so used to getting burnt that you just want to grab that profit right away. And then the other time when you're in a poor quality setup and you think it's going to go, and you hold on to it and you move your stop, and then it blows up through your stop and you get slippage, and you've taken out the hard stop, so now you got to exit it manually, and you see if you want to see if it pulls back, except now you're in an explosive measured move. Paul Tudor Jones talks about being limit down in cotton, I think it was. He thought it was the low, and he bought it near the close of the day, and then he realized he was in a measured move, and he couldn't get out of the market, and everybody saw that he was caught, and it was limit down for a few days before he was able to get out. But he said that one experience almost blew him out completely in the early days, and that was soul destroying to him. So learning from that, understanding, not getting too overconfident, cocky, whatever that may be, having a game face on about what you need to do in live time, being prepared, having your levels marked, having a thesis, a setup, and knowing what you need to do to execute and manage that trade in live time. Hesitation, FOMO, fear of getting in, all of that may revolve around the size you're trading. So if that is the case, trade as small as possible and then build up over time as your results dictate that and your performance dictates that. Number 3, they don't understand the opposition. So a lot of people, again, they'll go in, they'll start trading. They think it's fundamentals and technicals and all these things. And then they get in there and the market doesn't seem to be what they thought it looked like when they looked at the closed chart and when they read some books. The speed of the price, the spreads fluctuating and flashing, explosive candles, all kinds of little things that will manipulate your behavior at the screen if you allow it, if your screen time and experience hasn't given you that fortitude. But you're up against the most well-equipped, best educated, most informed, highly competitive, well-capitalized, well-informed individuals and corporations and businesses. And also they have technology that's working for them. There's a multitude of factors that you're up against that many retail traders underestimate. And so, again, when you go to the screen, discipline issues is a major factor for traders. When they're at the screen, they over the quiet of their weekend and at night, whenever they're going through and studying and testing and going through their model, and they do everything opposite when they get to the screen in live time, which is why I always emphasize backtesting your behavior in live time, backtesting how you'll perceive information, which comes back to preparation levels and having an executable setup. If you have a setup, a 90-10 setup, then there's not a lot of manipulation that you're going to get subjected to. You're either going to have a confirmation for entry or you're not. The rest is not sitting there going, I think this is going to go up, and I'm going to get a buy candle here in a minute. I'm going to get a buy candle. I can feel it. It's having the understanding of when you're at the screen, how are you going to behave and interpret the information and maintain your composure, maintain your focus. And, you have a plan, you're looking for this setup or this, crossover or whatever it is. You get there and all of a sudden it starts doing something different. You go, oh, geez, this is going to take off. I'm getting in. Next thing you know, 15 minutes later, all of a sudden it's doing the opposite, and it fulfills your original thesis and starts to move away without you because you just got caught in a losing position and you're not sure if you should get out. Maybe you've already been stopped out. Now you're sort of afraid to get back in. All these little things that come back to not being properly prepared and being disciplined when you're at the screen. Many retail traders have psychological issues. They see trading as a way out of their current circumstances. Maybe their unhappiness with their employment or their environment, their current situation, their relationships, whatever that may be. And they see trading as a vehicle, which it is, but you need to be tying everything in and treating it like a high performance Porsche or a Lamborghini or whatever vehicle that is, and treat your business like that and have the edge. And then, if you don't believe maybe your background, you've had a lot of challenging circumstances in your life that have been difficult to overcome, your belief about yourself, or maybe you've been highly successful in other fields and you believe that should just carry over into your trading, and it's not, and it's challenging your beliefs about yourself. This requires the work on yourself. There's a lot of psychological factors that traders will be exposed to through their behavior over time at the screen. And pattern behavior. Traders will often think that working harder and longer will change the results of their trading. You can work as hard and long as you want, and if you're still doing the same thing, believing something will change with more effort and time, and it doesn't happen that way in trading. Your results will only be reflected by the edge that you have in the market, how well you execute it over time, and how you manage your capital throughout that growth of your trading business. So if you don't have edge, you can work harder and longer all you want. If you have self-sabotaging behavior that repeats over and over again, you can work harder and longer all you want. And believing that it will change with effort and time doesn't. Critical to understand that. Working harder and longer at something with no edge or with sabotaging behavior will not change your trading results. The psychology of a winning trader is that they create solutions. They create solutions to their trading problems through thorough self-analysis, through reviewing your approach to the market, your business plan, and your actual trading model, and being very highly critical. Ray Dalio talks about being openly critical in his workplace in Bridgewater Capital, because he believed that if you couldn't handle criticism openly and in a fair and honest way, not in an attacking way, but in order to get clarity and get very specific, you had to be able to put ideas out there. You had to be criticized. You had to be open with other people about, maybe your work colleagues. A very thorough breakdown of people's, I suppose, egos in a lot of ways. And so, because most retail traders are isolated on their own, some people get in chat rooms, they work in, they want to be in groups and everything else. But most people wear masks. They hide. Like if you say to people, how's your trading going? They'll, oh, good. Yeah, really good. But in reality, they're not where they want to be. I'm talking about not just kind of getting winning trades. I'm talking about getting to the 7 and 8 figure level with your trading. How are you going to do that? Your business plan needs to reflect that. Your approach to the markets needs to reflect that. Your trading edge needs to reflect that in terms of its specificity and its scalability. And it needs to be very thorough and specific. It can't just say, I'm going to trade these bigger and bigger. They need to be very specific. Clearly define out specifically how your business will run and grow. How are you going to run your business? Are you just going to keep trading all hours of the day and hope that it grows? Are you going to have certain hours, certain markets that you trade, certain times, certain criteria about which instruments you'll trade based on the spreads, the liquidity, the volumes, whatever that may be. Maybe you're a penny stock trader. It doesn't matter what you trade as long as you know every detail about your business plan, about how that market will work. Are you going to trade on holidays? Today's Thanksgiving. I wouldn't recommend that, especially if, you're trading a U.S. market and the U.S. markets are closed. So understand every detail about your trading business. Create solutions. Your edge needs to be very specific and detailed. So I get, again, emails and traders sending me stuff that they sold the high of this market or they bought the low of this market. I got a market that's breaking down and people want to buy the low. And I'm not critiquing that. If that's your edge, if you have a very specific edge, that's what's important. The edge needs to reflect that it's profitable, that it's easily repeatable. If it's repeatable, easily repeatable, that means your business can keep doing it over and over again. Would you like fries with your Coke? Would you like fries with your Coke? Do you want, a drink with your Big Mac? Whatever. I'm not promoting McDonald's. I'm just giving you the aspects about how people can grow their business. Are you just trading the market? Are you just trading the market? Or do you have setups that will be able to rinse and repeat? And then certain setups that when they present are scalable that will be home runs. Peter Brandt talks about 3 or 4 winning trades being 80 to 90% of his profits for the year. He has trades all the time. He has lots of little losers everywhere, false breakouts everywhere. But he also has home runs. When these markets break out of weekly, monthly charts, consolidations, turtles, same thing, they scale into those winners, and those winners can go on range expansions that will significantly pad their trading accounts. So again, an edge. Peter Brandt's averaged 40% a year for, 40 years. So those are critical, because that's when you can see the importance of only looking for your edge in the market, your specific and detailed edge that will grow your business. And then a self-growth success plan, not a to overcome self-sabotage. We want to have self-growth success. So we're going to focus on success. We're going to build our business plan. We're going to get very specific with our trading edge, and then we're going to get very specific about what we want in our own personal situation. Maybe you need to get coaching for yourself, for your mindset, for your belief system about your own self-success. Maybe you need coaching in all areas. Maybe your health needs more attention. Maybe if you start exercising, you'll feel better and you'll be in a better headspace. Maybe you want to quit smoking, or maybe your mindset is very, damaged from other circumstances in your life. Maybe you have overcome or been challenged with very significant circumstances in your life. There are certain things that are going to affect each and every one of us that are buried deep inside of our brain. And for many traders, they are roadblocks, they're hurdles, they're potholes, they're stumbling blocks. And for other traders, they've transformed those into a high-speed highway. And they are driving a Lamborghini. And they have learned to, they started off with a little sports car, they ramped it up to a Corvette, and then all of a sudden they're driving a Lamborghini, and now they're looking at a Bugatti, whatever. So the point I'm trying to make is that if you focus on detail and get really specific and finer about all the little things, your trading business will grow. The psychology of a winning trader is this. This is what they have had to do. Every single trader has had to learn through the school of hard knocks. Every single winning trader. And I'm talking about traders who have won over time consistently, not just got lucky on a couple of, crypto booms and everything else. Good, it doesn't matter if you did, you did. But getting very specific and detailed about your trading business, about your trading edge, and your own self-growth success plan will create solutions to ensure your consistency and profitability over time. Hopefully you got value from today's video, traders. Focus on detail, finer details about the things that will actually grow your trading business. Have a great day. I wish you all the best of success in continuing your trading journey, and may the markets go with you.